I didn't know that trading was real. So one of my quests at one point, I was going around trying to find a trader who could show me how to trade. And I was willing to pay whatever because I just wanted to learn this thing. I just, because in my head, I'm believing that, hard work will pay off. Guys, put yourself on mute, please. That hard work will pay off. And, because I'm willing to put the work in, then, it'll be fine. So anyway, I had so many people was teaching me. I had this one guy who was charging me £200 per hour. And another guy was charging me £500 for 30 minutes. Got all sorts of these people. I went on a course that cost me £5,000 for 2 days. And with all of these people, right, one the thing that was in common, none of them were able to show me real results, real profit. And that was the biggest challenge, because at one point I was like, this thing is not real. So, because all of these tutors are so-called teachers of trading, when I say to them, look, show me a real account with real money in it, they couldn't show it to me. I said, okay, right, you're teaching me a strategy, right? I'm paying you what you asked me for, but you can't show me a profitable account. I don't really need to see a profitable account. I just need to see an account that you're using the strategy to trade. And they still, and a lot of times I don't want. I said, listen, I've got money. I don't need your money. I'm not going to send anybody to come and rob you. All I need is just for you to show me, right, a trading account, whether it be demo or array. I just want to see an account that you have used the strategy that you're teaching me. And they couldn't. It took me years before I could find anyone. I remember this guy from Soho Road. He advertised on Gumtree. I wanted to I forgot the name of it. But I went to his house. He was like, I need the guy, and I'm like, mate, just show me an account where you made money. He's saying, do you really want to learn, or you want to see? I said, look, I want to learn. But what I need from you is just for you to show me an account that you have traded and you have made money. And the guy couldn't show me. So, and eventually, this was the only time I started making money, was when I was able to see a real account that traded and made money. And this guy, I literally begged him anyway, because he didn't need my £500 per 30 minutes. I had about 4 sessions with him, 30 minutes each. And all he did was just look at my trades and sort of evaluate. But it's not even my trades I needed. I just needed to see that validation that it works and that the system works that he was using. So then when he then showed me, right, and I looked at it, I'm like, this guy had over £1 million in a trading account. The one day I had to beg him, like, please just give me. I said, okay, you know what? And then it's this guy who linked me to him. And he showed me a real account with real profit, with real money. And that's what made the difference for me. Okay. So if I didn't see that, I can promise you and I can guarantee you, I would be clueless. I would be clueless. So what I'm going to do now is to help you to work on your own mindset by showing you a few real accounts, or a few real trading accounts. So actually, because as we're going along with the course, I will also be doing the psychology of trading. And this is one of the psychology of trading in terms of growth mindset. And this, for me, was one of the biggest missing ingredients from my development, because at no point I thought this thing was real.
Somebody's asking if you're recording.
Oh, yeah, I'm recording. Yeah, I'm recording. Okay. I made him £262 last week. Okay. And this is the history we're looking. And, we've only opened the account on the 19th. Okay. Let's look at another trading account, right? This one here. Is this, let me see. This one here is a demo account. This is not real. But on the demo account, it started with £10,000. Why this is 11,000 is because basically, yellow.
It's a bit. I don't know if you can do anything about it, but it's kind of small. I can't see what's
Okay.
happening there with those numbers. Yeah.
Okay. Well, what you can see here is it's £4,000, but then let me show you something. This account started with 10,000. It's a demo. It's not, this one is not a real, but these are the trades that I've taken using the same strategy that I'm teaching you. This account, I've moved it from £10,000. It's now £31,000, 760, and this is since October last year. Okay. Now I'm going to show you a real account. I'm going to show you two real accounts because this guy gave me £18,000 to trade for him. So I'm going to show you his account. His account started 2 weeks now. His account started 2 weeks, and let me show you what that account is. Let's see. His account is 587. Okay. So his account now is, I've made him over the 2 weeks. You get some bonus there. That's just to give you leverage. His basically, we deposited 18 grand, and you get £50 on the what we call, is made of a £1,970. So £1,970 is made. Okay, because what we get is dividend, and I'm also going to teach you how to make, you know, make money trading dividend. There are a few dividend paying stocks this week, but you know, but what I've done, guys, I've closed out some of these trades because I've got, you know, I've got so much now to do. Just today, I've closed them out today. Of course, they're going to be losing trades, but you're going to win more than you lose, you know, with the strategy. So, say he's made about £1,900 on his 18,000 in just over 2 weeks. So, you know, happy days there. I've got another account that started. Let me give you what's the next account. So 985. Let's give you another account. Okay. This one is a real account though. This is a real account. Okay. That one is 985. Okay, now this account, basically, this account started with 14,000 £14,000. This account has now profited over £14,000. So this account is actually doubled. So it's now 29,452. So, you know, people are laughing here when it comes on to profit. So, of course, it will take time. Don't think this is just going to happen overnight. And it's a journey that you're on. You know, it's a journey. It's nothing easy. It's a journey that you're on. But of course, remember, it took me time to get to this level. So all the strategies and everything that I'm going to be teaching you, you know, it took me time. So what you've got to do is you've got to make sure that you don't try and think that this thing is going to get rich quick thing. This account has made since October. This account started. And we look at let me see, 14,000. If you do so, October, November, December, January, February, March. We're now in March. You look 6 into that, 6 into 14. So if you do 14 divided by 6, now someone's a calculator. 14 divided by 6. Okay, 14 divided by 6.
2 point something.
Yeah, 2 point something. So 2,000 something. Have you got my calculator, son? Okay, yeah. Right. Okay, yeah, my son took my calculator. I don't know where he put it. Okay, so it's 2,000 something per month.
2,300.
Yeah, 2,300. So that's what's pulling down on a monthly basis. Yeah, which is not too bad. You know, the ultimate would be, you know, if this account size was bigger. Now, one of the guys who gave me the 18 grand 2 weeks ago, he said, you know, if I can move it up to a significant amount, then he's gonna give me £300,000 to trade for him. So I'm looking forward to that one. You know, and in fact, you know, I've said, look, you know, and he said, look, I've got lots of people for you, Marlon. And I said, look, you know, I've got some people I'm training up as well. If they're doing well, I will also get them on board and you know, and give them these sort of opportunities as well. Because there are a lot of people out there, you know, my ISA account this week, I was looking at it, right? As you know, in the UK, it's 20,000 pounds tax free. So I'm like, yeah, you know, I can probably see if I can take out one of those low risk loans and put it in an ISA and see if I can make some money from it. Oh my God, it was 0.25% for the year. 0.25% for the year. Can you believe that? And you know, this is how the banks make their money. They lend us the money, right? Charge us 16%. They lend us the money and charge us 16%. And then guess what happened? Then they give us on our ISA 4%. You understand? So that's how the system works. You know, but at the moment, banks aren't giving anything. And with even England thinking of negative interest rates, then basically, you know, it would be you know, it's going to be challenging for the next couple of years. And that's the reason why no matter what, the stock market keeps on going up. So, but at the moment, I just want to, I've got a few things that I need to get done. So I've sort of come out the market for a bit. You know, and I'm just sort of, you know, trying to get a lot of stuff done. So like today I closed out all these trades. I just want to you know, focus on a few other things before I can actually get stuck into this thing, because like writing the course and, you know, rejigging it, because a lot of the stuff that we're doing now, you know, I want to do it better. Okay. So guys, I've also said to you, I've sent you an email, and in the email, it was the indicator. Now the homework, we only had 5 people who didn't do the homework. So I'm really appreciate the people who have actually done it. Now, you know, remember guys, as I said, I've got lots of things doing. And basically I did say up to 7 p.m. yesterday. And I looked at everybody's homework who came in, you know, and I marked it and I sent feedback to the individual. But I must say the homework was outstanding. Some people overdid it. If I was to give an A star, they would get an A star star. It was amazing the way people actually spent time to get it done. So that was really good. Now, what we're going to be doing today is we're going to look at a few things like cheap and expensive, okay? So let's have a look now. This is where we are now, okay? So that was just a start and the growth mindset and, you know, what you should be looking forward to. Okay, so what we're going to do, how to attach a stock to your chart, how to use a crosshair, and how to see your charts at the same time, okay? No, it's not what. Oh, no, okay, no, this is where we are now. Okay, we trade, okay, how do we trade stocks? We trade stocks using technical and fundamental indicators, yeah? So it shouldn't be technical, okay, no problems. Okay, guys, now listen to this now. We trade stock using a range of technical indicators and fundamental analysis. So that shouldn't state that, you know, I sort of didn't write that properly. So we trade stocks using a range of technical indicators and fundamental analysis. Now, technical indicator is that thing that I've emailed you, right, which we're going to use today. And the fundamental analysis is when we look about the companies and what the companies are about, what their balance sheets are like, and so on. Okay. Now, what is a stock? A stock is a security that represents an ownership share in a company. Okay. The more shares you own, the more say you have in the company. Example, voting rights. But the way we are trading this, we are not owning the share. All we're doing, we're using contract for difference or spread betting. So if the market goes up, we get a portion of the pie. If we're buying, that is, and the market goes up, then we make money. If the market goes down, then we lose money if we buy, and vice versa. Now, so what is a stock? Is a security that represents the ownership share in a company. The more share you own, this is if you physically buy the stock, right? Through a broker, that where you can, you know, buy the physical stocks. More share you own, the more say you've got in the company and voting rights. So sometimes they said equity or they call it share. So whichever one you use is the same thing. If you own the stock, you're a shareholder. You get regular emails and updates. For example, I own the stock, it's dead and boring, and no I'm actually losing on that one. But that was back in the days. Now, to open that, let me give you an example. I remember at one point I saw over £240,000 in my trading account, right? And how I did this, and let me tell you guys, don't do this, please. I sold this property, had about 40K. Then I basically took out a loan with another 20K. and then I made £14,000 off stock. This was when I first started, just by luck, beginner's luck. So I had roughly about 70, over 70K. I moved that £70,000 to over £200,000, and then end up losing all of it. I didn't sleep for 3 days. I felt like ants was literally crawling in my head. Now, I own those physical stocks, but because I was clueless of what I was doing, I end up selling them instead of just holding on to them. Right now, I'm telling you, if I'd held on to those stocks, I would have, and didn't touch them at all, I would have at least 3 to 4 million pounds in my trading account, because I physically owned the stock, so I didn't have to dump them. I didn't have to do anything. But because I panic, because let me give you an example, right? Let me give you an example like Lloyd's. Lloyd's went down to 21 pence, and I thought Lloyd's was going to bust. And, at that point, you feel as if the world is coming to an end. And that's something that you've got to understand, that, these things they do party. They do tend to go back to where they were before. Now, that's, in terms of, so I didn't need to invest over £60,000, right? I didn't need to do that. I could have £10,000 and open the same trades as a £100,000 account. You understand? So someone physically using 100,000, and that's what we call leverage. But I'll teach you more about leverage, okay? So let's get to the next bit here now. Okay, so how do we trade stocks? Invest versus trading, okay? So when someone invests, what do? They're holding the share over several months to years, tying up several £1,000s into one company, right? Own the physical share equity. Now, doing detailed search about the company, which could include elements of quantitative, qualitative, intrinsic, and actual value of the stock. And like people like Warren Buffett, they look for intrinsic value. That's what he does. He has got a particular strategy that he uses, and he finds intrinsic value of the company. Now, you can if you want to, because if you notice there, the demo account, I've held on to those stocks for over 6 months, and that has gone up. That account has gone up nearly £20,000. Yeah, it's over £20,000 in profit. Yeah, because I've held the stock over 6 months. Yeah. Now, so that's for people who are planning to be an investor. Now, trading, which is what I do, I don't hold them for long periods. Could be a couple of weeks. Well, of course, you could keep it for a month, right? So weekly, monthly trades, use of leverage, short-term trades, spending a few hours a week in any one trade, looking at the chart a few hours a day, and that's about it. Okay? So that's the difference between an investor and what we do, we're traders. Okay? But of course, you can take an element of the invest as well, because you could say, okay, I'm looking for the long-term play in Barclays, because the potential for Barclays going over £2 is very, very high, Now, so what type of stock trader are you? Now, for now, the type of stock trader I am, before, I used to be a buy and sell and all of that. But at this point, based on the way the stock market has been going, I'm only a buy person. Until coronavirus is settled, until this lockdown all of the world is settled, I'm only going to look for buy trades. Now, the strategy I'm teaching you can either buy or you can sell. It's up to you. You can buy and sell. 3 different accounts to see. You could also, if you wanted to, you could do different demo accounts. You can open more than one demo account, and you could see what type of trader would suit you best. Buy trader, sell trader, buy and sell. Because let me tell you something, the strategy will work regardless of whichever way, but the probability, you've got to put it in your own hands, okay? By using a strategy that you are familiar with, that you're interested in, that you like. Okay, now some people could be a buy and hold person. Okay, so please have in mind what type of stock trader you would like to become. Okay, now, how do we attach indicator to our chart? So this is the next thing that we're going to look at now. Okay, so that's what I'm going to teach you now, how to attach the indicator. Now, who would like me to log on to their computer? But I will have to use I'd have to use AnyDesk, because TeamViewer basically, because it's got a talk setting on it, it doesn't. Yeah. So who would like me? Anybody at all would like me to use their computer? I need a fast computer though. I don't want something that's going to be too.
I'd love you to use mine, but I can't even download the AnyDesk.
Oh yeah. Okay. Anybody else? Anybody else with any desk on
Yeah,
their computer?
I think I downloaded AnyDesk.
Okay. What's your
a
number?
couple days. Let me just get it for you.
Okay.
If you be aware.
Your MetaTrader platform.
Okay. That's it right there.
Okay, brilliant. Okay, guys. So what we're gonna do now, I'm gonna show you how you go about attaching an indicator to your chart. Okay. So Mark, what I needed to do now, I needed to go back to your email.
Back to my email. It's right
Yeah.
here.
And then I needed to click on download. Click on the download. Yeah.
Click this.
Yeah, download it.
Mhm.
Okay, then I needed to click on the up arrow and then go show in folder. And then what I want you to do is to copy that. So right click hover over it and then copy. Okay. And then I want you to go back to your MT5 platform and then go to file. Then open data folder. And then you're going to go to MQL5. And then you're going to go to indicator. And then what you're going to do now, you're going to what I want you to do now. No, but don't do anything there. Don't do anything there because we're going to create a folder for yourself. You're going to click on the top here. You're going to see a new folder. So click on that where you see this folder here. Click on the folder and then you're going to name it Mark. Let's call it Mark Indicator. Okay. Just put an S on it to show many indicators. Yeah. Hey, excellent. Let's press enter. Okay. And then what you're going to do now, you're going to control and paste or right click and paste in this area. That's it now. There it is. That's the indicator that we've just put on. Okay. We have now added the indicator to our MetaTrader 5. Now, for this indicator to take effect, we've got to close MetaTrader 5 and reopen it. Now, do that for me now, please.
Let's close it by that.
Yeah,
Close
click
the
on the
X,
X, yeah. And then reopen the MetaTrader 5, please. Okay, what we're gonna do now, let's close the market watch. And then we're gonna go to view. And we're gonna go to navigator. And that's where we've got all of our indicator. Then you're gonna scroll up to where you see Mark's indicator.
Scroll up.
Yeah,
Right here?
Yeah. Can you until you see Mark?
Oh, I see.
Can you see Mark?
No, I
Scroll
can't
down.
see Mark yet.
Scroll
Probably
down.
down.
Okay, scroll down. Let me see. We're looking for Mark.
Which one is it in?
No.
Oh,
Yeah,
here we
there's
go.
Mark.
It's at
Yeah.
the bottom. Yeah.
Yeah, at the bottom there, yeah. So click on the plus and then double click on it now.
Okay.
And then you're gonna click on allow modification of setting.
Okay.
And then they're going to go to input. And then leave it as 2 for the time. And then go to color. And we're going to leave it as that. And then we're going to go to visualization. And then we're going to change, we're going to click on all time frame. Uncheck all time frame.
Uncheck all
time frame. Yeah.
Yeah.
And then we're only going to look at this for the weekly and the monthly. So we're going to take off. So uncheck minutes, hours, and daily. Okay. So click OK. Now, if you notice, you won't see it on the chart, on the hourly. Click on the 4-hour time frame.
Okay.
Okay, you won't see it. Click on the daily. You won't see it. Click on the weekly. That's it now. Click on the monthly. Okay, so that's what we're going to see.
Oh, the zigzag thing is the indicator.
Yeah. That's the indicator.
Gannzigzag. Okay.
But for now, I'm not teaching anything about indicator. I'm just going to show you how we're going to be using this zigzag indicator. Okay. Right, guys. Now, thank you for that. So what we're going to do now, we're going to talk about cheap and expensive. Okay. Now, okay. So there's someone who's going. Okay. Okay. So what we've got now, guys, is this. We're finding what we call supply and demand zone. Okay. So I'm going to use this horizontal here to put the horizontal line. I'm going to make this horizontal line a bit thicker. Okay. So you double click on it and see, you can see it's highlighted. It's checked. Let me show you something. See, I can pull it down. Can you see this check there? If I double click back on it again, it's gone. Double click on it. I'm going to right click. I'm going to go properties, left click. And I'm going to change the thickness. I'm going to make it a bit thicker. I'm also going to change the color. And probably change the color to yellow. Okay. That's it. Now what I'm going to do now, I'm going to put this line. Let's uncheck it so I don't get deleted. Okay. So then I'm going to put it again where the ebbs and flow of the market. I'm going to do so. Let's look from the left to right. We're looking from left to right. So let's have a look now. That's one there. The market started there, went up there, pulled back to there. Okay. So we're looking at the ebbs and flow of the market. Okay. Then we go again. The market move, break above, and come to that point before, turning back around. Okay. You just have to hold on onto it. I'm not sure. I just jumped in, but because it's not my computer. Okay, but I need to get it on the tip of this thing. Okay, then we scroll down to where it was in the past before moving back up. Then break up to this point before coming all the way down to this point. Then up to that point before coming back to where it was before in the past. Breaking up to that point before moving all the way down to where it wasn't at one point, and then coming up to that point. Now we're gonna know we trade from the daily time frame. Okay, so let's look now. This is what you're gonna do for me. We're gonna do over a 2-year period because this is gonna be your homework. So if you notice here, every time the market come down to this zone on the daily, goes up to this point before coming back to the same point, go up to that point before coming back down to this, and then goes up to here If you notice, it breaks up, pull back to where it was before breaking away. Okay? So let me show you now. If we go to insert, and then we're going to go to, let me see, where am I going to go to? I'm going to go to text, okay? And I'm going to write the text there. Now here is what we call supply zone, okay? Sorry, demand zone, okay? Because a demand zone is a region where something is considered cheap, okay? I'm going to make this a bit bigger. So you go to parameter, and you can change the font to 16. You can also change it, the color of it, from red to yellow if you wish. Okay? And that's it. So that bit here is your demand zone. If you click on it, you should be able to move it, okay? So this is a demand zone. So and this up here now is where people would say this stock, Caterpillar, which is a big company, is expensive. So let's put an expensive zone now. So you go to object, graphical, text, click there. Where you see text, you're going to type supply zone. Now, supply zone is where something is considered expensive. So we've got to double click on it if we don't want to be able to move. Yeah. Now, every time the market comes up here, people say this stock is too expensive. So they sell it. It comes back up, sell it again. Comes back up, sell it again. But then they're saying, this was when we had the pandemic though. But they're saying, you know what, this is cheap. Let's buy. But if you notice here what happened, the market went up, there, coming back down before just breaking away, pulling back to previous supply. Now this now becomes a new demand zone because the market break above and come back to the point where people no longer think that this stock is expensive. So let's go again. So this bit now is going to be Mark, are you pressing something? Mark, you pressing something? Okay. So we go to object, graphical, and then text again. Now this bit here is going to be demand zone. Okay. Okay, so that's a demand zone. So if you notice the market break above, pull back, this is now a demand zone. Now here now, this bit would then become our new supply zone because this now is going to be considered expensive. Okay? But look at what happened there. Market, which prices I'm talking about, breaks up, pull back, break off, pull back to about the same point. So this supply zone now becomes a demand zone. This now is a supply zone. Okay, so at this point here, when the market comes up to there, and this is a supply zone, the market break back down before pulling back up, all the way up. And if you notice how the market stagnant at that point, before breaking up, pulling back to this point. Okay. Now, of course, this is through Corona time. So, well, let's have a look now and see. This now becomes our new supply zone. Sorry, demand zone. And remember that it's all about the price people are willing to pay for a particular stock. Now, I wouldn't buy this. I wouldn't buy this stock. This is what I would want to see. I would want to see this stock drop all the way from here back down to this point. That's where I would be looking to buy. At the moment, that's too expensive. So I will have to wait until this stock get back to this point. Now, what I'm looking for is for you to be able to identify supply, which is where something is expensive, and demand, where something is cheap, considered cheap. Okay? Now, next thing I'm going to show you, I'm going to show you now I'm going to give you another word. Instead of using the word, I'm just going to go to my computer because I'm hearing echoing. Yep. Now, once we get to this point, right, we don't want it on the minute. We click on get rid of that. We don't want it in the minute. We don't want it in the hour. We don't want it in the daily. We only want it in the weekly and the monthly, right? So that's what we've got there, right? Let me take a different stock. Let me get a different stock. Let's get something like Amazon. Let's get something like Amazon. So drag and drop Amazon onto the chart. So this is Amazon, right? Okay, then I'm going to draw my supply and demand zones, right? So this is one zone. Okay. All right, so I'm just going to make it a bit thicker. So I'm going to right click on it and I'm going to go to properties. Just going to make it a bit thicker. Okay. So I'm going to move it up. Remember, guys, if this thing is not on check, then you won't be able to move it. If you click on it like this, you won't be able to move it up and down. You've got to double click on it and with your left mouse and then move it up. Okay. So we're looking at the ebbs and flow. Okay. Just looking for the ebbs and flow of the market, right? No, this is Amazon. Just imagine if you had bought Amazon from 20, from 20. Oh my God. Okay, and then we've got, yeah. Okay, so we don't really need to do the ones down here, but it's all good. Right, so there's not much we can see here. So I would probably go onto the weekly chart. Go down to the weekly chart so I can just sort of see a bit more information on the weekly chart. Okay. So you can see that the market comes down to here and then going back up, but we trade on the daily time frame. Okay. So this is Amazon. I made money on Amazon. Okay. I bought Amazon here because I was waiting for this. Now, yet again, look at Amazon. Amazon was moving in between this region. So Amazon goes up there, comes back down, goes up there, comes back down, goes up there, comes back down. Before people saying, okay, yeah, Amazon is good to go. They're making lots of money. They're getting lots of clients, So Amazon basically, okay, this was, people are saying, well, this is now cheap. So Amazon breakout, Now people are saying now Amazon break up above there, combat there, break up above there, combat down, break up above there, combat down. I bought Amazon when they were there. You know, let me show you. Go to my toolbox. I can show you Amazon. Where's Amazon? Amazon. Yeah, there's Amazon there. That's 456 pounds there on Amazon there. Okay. So you know, because I get cheap, and another cheap. Okay, goes there and I bought. Okay, because that was cheap. Now, so that's what we're doing now. So your homework will be, this is what your homework going to be, right? Is to identify the supply and demand zones. Now, another word, because sometimes when I use the word supply and demand zone, then sometimes, you know, people sometimes don't really get it. So what I'm going to say now, what you see, the demand zone is like your ceiling. Sorry, your supply zone is like the ceiling in your house. Your demand zone is like the floor, the lowest point. But of course, remember, the market can do change. So here now, we're going to have this. So on this side here, right? Here now, we're going to have this as, and I'm just going to put in the demand zones, okay? Now, another name for the demand zone we're going to have is what we call support, okay? All right, so support. So this is the demand zone there, okay? That's the demand zone there. Now, I'm going to show you now. This bit now is going to be so this bit, if it's moving from here to there, this bit here is going to be considered to be a supply zone. That's where it's very expensive. Supply zone. And we call that resistance level. And that's called resistance. Okay? So that's the resistance. I was expecting it to turn around. That didn't happen. So then the market moved all the way up to there. So it breaks through there all the way up to that point. Okay? So this now becomes my new supply zone. Okay? And then we've got resistance. Okay? The supply zone is the resistance. We're saying when it comes up to here now, every time this market comes up to this point, we're looking to sell. If you're like a sell trader. Okay? Now the market comes up to here, pull back, come back, then drop. We're looking to buy here now because since the market pulls up, if it come back to a zone where it was before, we're going to consider that zone to be a demand zone because we're going to say, no, it was very expensive up there. We're waiting for it to pull back there. Okay? So here now, we're going to have, this is going to be our new demand zone. But unfortunately, people didn't see it. Yeah, we call that support. And that support, the support is like a floor in your house. Okay? So we're saying now, when this market goes up to there, because this was a supply zone, when the market moves back to the supply zone, we're saying that people are going to want to buy at this zone. But unfortunately, the market break all the way down, going back to down to this point. Now, if the market goes back to a zone where it was in the past, then basically this now becomes my new demand zone. Okay? So we're going to go again. So this now becomes my new demand zone. This is where people say stuff is expensive. Sorry, this is where people say stuff is cheap. So demand zone, where people, it's like you've got some stuff that you're selling, right? For example, like we've got face masks now. Probably after coronavirus, there won't be any demand for face masks for all of those people who stockpile all the face masks. And say, for example, if they came out tomorrow and they said, you know what? We don't need to wear face masks once you've got the vaccine. then all of those people who had the face mask, right, stockpile, they're gonna have to what? It becomes like almost worthless because people aren't gonna be buying them. So all that stockpile, they're gonna have to get rid of them. So if they used to sell them at £10, they will have to sell them at what? You know, at 5, you know, probably 6. You understand? Because there won't be any more demand for them. So there becomes oversupply of it, if that makes sense. So at the demand zone, we're looking to buy, okay? So that's the buy zone. So demand zone, buy zone, okay? So demand zone, buy zone, okay? And also we've got, actually, that's probably what I need to put in is, and supply zone, sell zone, okay? So let me just edit this one. So supply zone is the sell zone, sell. That's where we want to sell, at the supply zone. Okay. Demand zone, where we want to buy. That's what we want to do there. Okay. That's what we want to do there. We want to buy. Right. So if you notice here, the market comes down to this zone. Yeah. This is the demand zone. We buy there, goes back up to there. We want to sell there. Buy there, goes back up to there. We want to sell there. Or we take our profit. Comes down to here. We buy here. I want to take our profit there. Now, I would have been waiting for the market to come back, but no, it didn't come back. So because that wasn't a part of my trading strategy, I would have gotten in until here again. So the market goes up to there, pull back, I'm looking to buy there. Take my profit up there, I'm looking to buy there. Take my profit when it's close up to there, I'm looking to buy there, which I did, made some money, and just got out. Okay? Now, so no, I won't be able to give you the PowerPoint, guys. The PowerPoint, you've got to use the other resources, okay? Now, so this is going to be your homework, all right? So what we've got is this. Okay, so this is where, so this is the step that you follow to attach the indicator. Now, the next bit now, what is supply and demand zone, okay? It's a technical analysis. It is the turning points of the market, which is based on price. It is where we find cheap and expensive stocks, okay? Now, Gene will learn about that as we go along. This is best done on the monthly time frame. So if you notice there, I use the monthly time frame to do my analysis, and then I move on to the daily time frame to put the supply and demand zones on. Okay, now homework. What you're going to do now, you're going to create a template using the gannzigzag indicator. You're going to highlight about at least 6 different charts, right? And you're going to highlight the different zones on the chart, right? You're going to put, and I want it to be done over a 2-year period, okay? So this is exactly what you're going to do now for me. If we go to the chart, this is what I want you to do. You're going to do it for 6 different charts, okay? And over a 2-year period, see, 2018 to 2021 or 2020. And all we're doing is identifying the ebbs and flow. Remember, first thing, you go to your monthly. On your monthly, once you put this indicator on, you go to your monthly, down, find the ebbs and flow of the market. Then you go to the daily. Okay. Okay. Now, I didn't understand. What was your question? What was your question, Gene? Say your question so I can understand it.
So Marlon,
Yeah.
I managed to download the live MT5 trade site on a HP laptop.
Okay, brilliant.
But when I tried to download the demo, it just kept, every time I pressed enter.
No. It's the same account. It's just that you use different login. It's the same. Everything is the same. It's just that you use a different login.
Oh, you're gonna have to show me then, because when I went to demo and used it gave me a different login, but it still wouldn't download. It just kept pushing me back to the start.
Okay, don't worry about it tomorrow. If you give me a ring about 8:20, just send me a
Okay.
reminder as well. Yeah.
Okay,
I
cool.
will log on and show you how to do that. Okay,
Okay,
guys.
thank you.
No, this is your supply zone, right? That is your demand zone, right? This is your demand zone, because if the market is coming to that point, then that becomes a demand zone. But unfortunately, the market break through this, came back down to where it was in the past before now forming this ebb and flow between these 2 points. So we're looking to buy there, sell there, buy there, sell there, buy there. Before, I would have been waiting for the market to pull back down to here, which it didn't, and it's carried on. Break above. Now I'm looking for another cheap zone. So this would be my demand zone. That would be my supply zone. Okay. Now I have a fantastic evening, guys. All this is what you need to do for your homework. You need to do it on 6 different chart, and then you're going to basically just print screen those. So all you'll have to do now, so if I go to you can either use a snippet tool. All computers got the snippet tool. So you go to the snippet tool, and then this is all you've got to do. So when you've got the snippet tool now, where's the snippet tool? There's a snippet tool. Okay, let me get the snippet tool up for you. I get the snippet tool, and then I go to new, click on new, and that's it. You've got your homework. Right click, copy, go to your PowerPoint or whatever you want to do it in, right? And then you basically go to blank and just put it there, and that's it. Yeah, you're done. Okay, guys.
But Marlon, I've got a quick question.
Yeah.
I'm having problems with PowerPoint.
Do it in Word then.
No. It's probably a very simple thing for you to answer.
Yeah.
Is that when I snippet and put it into PowerPoint, the actual thing keeps moving. How do I make it stay?
Okay, it's moving like how, like
if I touch it.
If you touch it like that?
Yeah.
Just drop it there and leave it. And then click off it, but don't touch, because if it's highlighted, yeah.
Yeah.
So if it's highlighted, then it will move. But if you basically uncheck it, just like on here, these things will move. Let me show you something now, guys. If you don't highlight, let me show you something. You see here, I'm going to click on that. I'm going to double click on that. But if I click on delete by accident, look what happens. I'm going to click on delete now, and everything goes apart from the bit that's unchecked. On the PowerPoint now, if I basically click on this, and if I click on delete, then it goes. You understand? But of course, you can press Control and Z and it comes back. Yeah.
Okay.
So you basically make sure you click outside the box so you've not highlighted the box there.
Yeah.
You don't lose it.
Yeah.
Okay.
Yeah. So guys, right. So what we're gonna do now, everybody should have this homework ready for me for next week. Can you also add to your homework? Can you put the name of the company as well? Put the name of the company as well, right? That you're looking at. And remember, you can choose your favorite companies. So it could be that you say, you know what, I want to look at eBay, I want to look at Barclays, I want to look at Santander. You understand? Just choose the companies that you're in love with. Okay? Yeah, I'll take one more question and then that's it for tonight.
Yeah, how quickly are you going to get this recording uploaded to YouTube?
I know, I'll put, it goes up tonight.
Okay, cool. Thank you.
Okay then, guys. Have a fantastic evening, guys, and see you all next week.
Okay,
Cheers.
thank you.
Okay, bye. Thank you.
Yeah.
Bye.
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 Thank
Bye.
you.
You're welcome. Bye.
All right. Bye-bye.
Bye.
Hmm?
Oh, you on with it already?
Yeah.
Your name is